What's up, guys? Welcome to the Crypto Savvy channel. I'm Craig, and as usual, we're going to go over the markets. But first, I need your guys' help with something. I want to ask you how you prefer these video layouts. Obviously, on Mondays, we do the in-depth looking at Ethereum, Litecoin, gold, silver, everything, all in the markets on Monday. But the quicker videos during the week, like this one, which may not be that quick because I have some questions to ask you guys. But here's some things you can do to help the channel out. Make sure you smash that thumbs up. Let's get at least 1,000 likes on this video. Also, make sure you leave a comment below letting me know, do you like the way the charts are laid out every day, or would you like to see more smaller time frame first, bigger time frame second, Dow first, Dow last? Kind of give me some suggestions so I know what you guys would like to see in the videos. That way I can line them up for the most part how you guys want them. Whatever I see most in the comments, that's what I'll go by. Like, would you rather see Bitcoin first, then the Dow, DXY, which way? Because on this channel, what we like to do is track the markets. I don't give you a bullish video one day, bearish video the next, screaming 100,000 one day, screaming 10,000 the next. None of that stuff. We actually track the markets, watch what's going on. But how would you guys like the format to be? Let me know in the comment section below. Also, if you're new to this channel, make sure you subscribe to the channel for daily updates Monday through Friday, sometimes on the weekends. And every once in a while, I do throw a members video in there to kind of go over risk management, things like that. So anyways, if you like the content, make sure you smash the thumbs up. Let me know what you think below, and let's take a look. So looking at the Dow Jones, this big falling channel that we've been watching forever, you can also see it here in the RSI. As you can see, it's a rising channel in the RSI, falling channel in the price action. We have our targets here that we've been watching for, right? So what happens with Bitcoin ultimately depends on what happens in traditional markets. And I've been saying for a long time now, I think the traditional markets are in serious trouble. I think it's going to be the biggest money grab in history, along with Bitcoin. And remember, I've always talked about when the traditional markets go in a bear market, nothing is safe. The only thing that rises is the DXY. Why does the DXY rise? Because everybody gets into the dollar, and then the smart money will stay in the dollar till there is a true bottom, and then they'll buy the bottom. You can see that in all past market crashes. And then once they buy in, because their dollar is worth more, they buy in at the bottom and they ride that up for multiple years, sometimes generations. So this is a huge opportunity if it plays out like this. So let's get into it. So we were watching the falling channel, obviously still inside it. The bottom of the falling channel right now is around 28.4. I do believe we'll probably get it bounce if we get down to this area, possibly today, but most likely next week. But if it does break, then our target is the measured move of this rising channel from where it broke, and that gets us around 27,000. What you might see here is if we break this 28.4 range sometime this week or next week. Oh, happy Friday, guys. We made it. It is the weekend coming. Crazy things can happen in the weekend, but I am going to let you know in the Bitcoin chart what areas are very important to watch, what to watch for. And anyways, so 27, if we do break this 28.4, look for 27, maybe a pop back up to retest the bottom of this channel. Could get a bit wick back inside or whatever, and then continue down. This is the measured move of the falling channel. If we do fall out of that, it could get us down to around 23. And then I have the long-term trend line here. You can see from back here in 2011, we tagged it. And then again in 2020. And if we were to get down to this range again sometime next year, maybe, but it'd be around 21,000. If this area breaks, guys, I think it would be safe to say that we are more so going to be in a Great Depression. Does that have to happen? No. As long as we stay above this, we may get, a big bounce here and the markets turn around from there. But as of right now, things just aren't looking that good. Let's take a look at the DXY. First, in the smaller time frames. As you guys know, we were watching this channel. We broke out. We are now back below it. So that invalidates this channel for me. Does that mean that we're bullish in the long term or bearish in the long term on DXY? Absolutely not. We're going to get rid of this target here, but we still have our top of our rising channel here, which we broke out of. And if we were to come back and test it, would be around 109-ish area. I do not see the DXY going much lower than that. Let me show you in the daily why, and we'll take a look at our targets that we've had forever. And I'll show you why it's still extremely bullish. So our target from the breakout of this rising channel here is 122.59. We do have much higher targets. Could this come all the way back down and retest this area? It is possible, and that's around the 106 to 107 range. Possible, not likely in my opinion. Now let's take a look at what happens when the DXY rises like that while traditionals are falling, right? We can go back all the way back here to the 80s. You can see it always has pullbacks, right? That's how markets work. So everybody's like, oh my God, it's the top, it's over. But look at this rally. That's what happens during times like these. This was back in the 80s. We've seen the same stuff, guys. So in the big picture, what I'm looking at here that's your daily. Let's look at the weekly. So there's that target. Now everybody's saying we broke trend line showing in the daily chart. But if we look at this on the weekly, the bottom of this trend line, which we broke here, is around 109. So if we do go any lower, that's where I'd be looking for a bounce, but I'm still looking for this 122. And then those of you that watch the channel know that my big picture is this falling wedge right here. If we take a measured move of that, it gets us all the way up to 178 to 180. People say that's crazy. Guys, look around. Pay attention to what's going on or what they say is going on, and it will make more sense and be more clear to you. Let's take a look at, before we go into Bitcoin, make sure you check out Prime XBT. Links down below in the description. You can use my promo code SAVVY50. That'll get you up to a $7,000 bonus. SAVVY25 will get you 25% off your trading fees. Those both last for 30 days. All you have to do is put another email in, start another account. Anyways, so definitely check out Prime XBT. They don't trade against you. You can trade gold, silver, oil, S&P, Dow Jones, Bitcoin, altcoins, everything, all from one exchange. You can have multiple trades in that, don't clump them together. You can also trade pre-markets. Definitely check them out if you haven't already, if you are interested in trading. But guys, make sure you practice. Don't just jump in and throw all your money in and think you understand trading. They do have a contest section. It's totally free. You get free money to join the contest. If you win the contest, you can actually win tradable money. It's a great way to learn the platform and no risk. So definitely check them out. All right, so looking at this falling wedge on the daily in Bitcoin, it's also lining up perfectly with our RSI down here. Did the same thing, right? Let's take a look, see if we can find any divergence, see what's going on here. And let me get this off. So what I'm looking for is wave 1, 2, 3, 4, looking for a fifth wave down. I've been talking about a possibility if Bitcoin's going to bottom this year, I would have to see it down to around 3,500 this year, maybe 4,500, somewhere in that range. It would have to happen before the end of this year, which I don't think. I think we're going to get a false bottom. And I don't even think the false bottom, if we don't do this, the false bottom's between 75 and 8,500, and we may not see that until February or March of next year, which will, bum the 4-year cycle guys out because it will invalidate the 4-year cycle. If we hit this 35 to 4,500 the end of this year, I think that could stick to the 4-year cycle theory. But guys, Bitcoin has not been around for 100 years, and every 4 years, it's had 2 4-year cycles, right? 3 4-year cycles. The first one, Anyways, they act like it happened 100 times, guys. And usually that's how markets get people. They make them think that something's going to happen over and over again, and they make up a great spot to get exit liquidity. All right, so let's take a look at the RSI. Are we seeing any divergence in the daily? Yes, we are seeing a little bit of hidden bearish divergence from this high to this high. Obviously, if we get above that, that can break that. But if you look here from this high to this high, and then where's that at? From this high to this high, we're making lower highs in the price action. Let me thicken that line so you can see it, and I'll make it white. So we're making lower highs in the RSI. Now, if we close a daily above this 20,250, that will invalidate this bearish divergence. Hidden bearish divergence. And remember, hidden divergence is a continuation of the trend. So if you find hidden bullish in a bull trend for that time frame, hidden bullish, then it would be a continuation of the bullish trend. We are in a daily downtrend. Hidden bearish divergence is a continuation of the trend. The trend is down. Now, a lot of people are looking at this as bullish divergence here. Higher lows in the RSI, lower lows in the price action for it to pump up. So in theory, that is a bullish divergence. But when you have hidden bearish divergence, that's the RSI resetting for more downside. So this fakes a lot of people out, making them think that this is bullish divergence, when all it really is the RSI making more room for downside. So be cautious and be careful there. And we'll take a look at what my targets are in the daily and why I think that 35 to 4,500 is possible. That's just a measured move of this falling channel or falling triangle or descending triangle here. And if we take this down to here, we break past this 18.2 range, that gets us down there. Now, that doesn't mean we fall straight down, guys. This could take a long time. Even if it was to bottom there this year, which I don't think is likely, but it is a possibility. May see something like this, go back up. You know, this may take a long time. And remember, this is the daily chart, guys. So it could be something like that if we were going to bottom this year. But I think it's going to take much longer, and I'll show you why here in a minute. But first, we're going to get the RSI off there. We're going to look at the 4-hour chart and look at the more immediate time frame, right? Kind of look at what we're looking for, or what we're watching for. So anyways, as you guys can see, we've been in this rising channel. We had a bull trap getting just above the channel, kind of like the one we had at 48,000, right? So right now, we are getting back above the center of this channel. So if we start getting support at this 19.5 again, we open and close some 4 hours above that, then we could be coming up to retest this trend line up at the top at 20,500. If we do get there, that 25,500 range, guys, I do expect a rejection there, being that is the top of that big, huge falling wedge, right? But what you have to watch for, and especially with the weekend coming, you may get a big spike above there and could get up as high as, and if it was to happen today, 21.2, somewhere in that range. But I don't expect it going higher. Now, if it does, and we start opening and closing candles above that 21.2, then we could be looking for more upside. And if that does happen, like say it happens this weekend, I'll do a video on it to show what to look for. But guys, until we get above this 20,500 range, I just don't see it being able to be bullish. Let's take a look at what the breakouts would be. So if we break up from the top over here and break that 21.5, that does show a possibility. Guys, this is a possibility. I'm showing you the bullish possibility. A lot of people say I don't show the bullish side. Well, there's confirmation points. Before you can look at the bullish side, they have to break certain points. Bitcoin's not going to jump to the moon in a couple days. That's not how it happens. So anyways, if we broke up above this channel, that target would be around 22,250, 22,300 range would be the measured move of that. But remember, we'd have to get above that 21.2, which is the top of this descending triangle. That's where I'm getting that. As you can see, the yellow descending triangle right here, that would be testing the top of that again. Like I said, in the absolute bullish case, if we break to 20,500, be cautious to about 21.2. If that breaks, then you might see 22.3, somewhere in that range. There's your bullish. Now, we break the bottom trend line this weekend, which is of this channel. That is going to be somewhere in around the 18.6, 18.7 range if it was to happen this weekend, right? That happens, then you're looking for the bottom of that triangle at 18.2. But let's take a measured move of the breakdown there. That would get us to around 16.8 as long as we break that 18.2. I know this sounds confusing, guys, but there is confirmation. A lot of these guys are just drawing lines, throwing out numbers that make absolutely no sense. We're digging in deep. We're trying to figure out what's going on. So far, we've been dead on. I'll show you in the next two charts of what to look for in the longer term. But so what it looks like is if we break down here, it's going to be around that 16.8 for the first point of support. Then we may come back up to retest that 18.2 range, which would be the bottom of the descending triangle. And then if we look at this whole thing I showed you guys yesterday, looking at this as a flagpole, this is a bear flag, bringing it down. What does that target get us? Right around 14.5. We've been talking about 15.5 and 14.5 for a long time. So this is where I would expect a decent bounce. Does that mean we're going to the moon from there? Nope. That's where I would expect a decent bounce, 14.5 to 15.5. And this may happen quick. If we do that, we could come back up for another retest of the 16 to 17.5, test this old bottom. But usually when we break these lows, we don't come all the way back up to them to retest them. Just like back here, I'll show you right here. Once we broke this low, which was a big low at the 32.9, we never came back up to retest it all the way. Most likely because everybody thinks it's going to retest. Then we had this low at 53, never came back to retest it. We've talked about that plenty of times. For those of you that have been around for a while, obviously the charts make sense and you know what I'm talking about. Those of you that are new, stick around, watch my past videos. You'll see I'm going to show you some old charts now. This is how we called each one of these lows, right? Once we broke this right here, actually when we broke this 38, we had a measured move right here of that rising channel that broke us down right to where we expected. You can look back then, I was calling that 2,500. We hit it, nailed it, and then we made yet another bear flag here, right? And we took that same measured move because that was our flagpole, bring it down to the bear flag, and boom, we had this target of 17.7. We called that way before it happened. We called it at the break of this right here, which was in around June 6th. We actually called it around June 5th. I told you to watch for that. We made this target of 17.7. We were at 30,500 when that call was made. A couple weeks later, boom, we hit our low. And then I had said, we've been watching this here, right? So looking at this as a rising broadening wedge, let's see what that gets us from the break. 14.5, a lot of confluence there at 14.5, guys. And then if we take that same flagpole right here, looking at this as a bear flag, we bring that down and boom, 8,500. That's why I said 75 to 8,500 is what I'm looking for a false bottom, possibly not till March or February of next year. And I'll show you in the next chart why and what I'm looking for. This chart that I'm about to show you, I made on December 2nd, 2021. I also made a video on it and it's playing when you open my YouTube page. Definitely check that out. So this is what I'm looking for. And then how do I get that 38 to 3,500 again? Well, we take this. Where is it? May have to draw another. Oh, there. Yeah, this is it. We take this trend line here from the break of this. That was a huge weekly break, right? We take a measured move all the way down to here, looking at that as a flagpole, this being the bear flag, and that gets us to that 3,800 range. Now, that doesn't mean we go straight down, which it could happen, but it's less likely. I think this may take quite some time, and let me show you why. This is the chart I made on December 2nd, 2021. Like I said, go to my YouTube page. It's playing right there on my page if you open my YouTube up. We've been tracking this so far. It is playing out absolutely perfect. And if you watch that video, and every video since then, I had said, this is how bubbles pop. First of all, everyone's super euphoric here at the top. And then you have this big drop and everybody gets paranoid, thinks it's just going to go to zero and wish they would have sold up here. Then we get this pump and then everybody's super bullish again. They might even buy more. And just to come down and make a lower low, then they wish they would have sold up here. I've repeated this over and over, but I'm going to do it again. I know a lot of new people coming in. And then what did we do? They got all complacent, thought we were going to new all-time highs here, and then boom, another low. Then they wish they would have sold up here. Then what happens? You get another little rally, and then they get happy, going to the moon again. And then what happens? They wish they would have sold up here. Then what do? Make a lower low, continuing that process all the way down. And then you get a false bottom. And guys, I've showed you the time frames here are the exact same. They're both weekly charts. They're both playing out to the T. And what would invalidate this? A break of this 55 EMA. That would invalidate it for me. And that 55 EMA lies around 32,260 as of right now. Obviously, that goes lower as the weeks go by, but that is the invalidation point. Unless that's broken, this chart is 100% valid, right? So what we had over here, and like I said, the time frames from tops to bottoms, tops to tops, bottom to bottom, they're all the same on this. Pull the charts up yourself, check it out. I've went over it in many videos. But anyways, this bottom here, if we did the same time frame, would be around February or March, and that would be the 75 to 8,500. And then what happened over here is we got a 100% rally. That doesn't look like much. That's 100%. So if this does happen, February or March, maybe a good time to either buy back in or put in a massive long, ride it up for maybe, you don't have to ride it up to the very top, but get it into some good profits, put your stops in, let it ride. When it comes back out and stops you out in profit, I think we're going to new lows like we did back here. Got everyone faked out. It also, if you look at the RSI, it broke the weekly trend line here to get everyone bullish for the false bottom. And then what happened? It just lingered around in here for a while and came back down, made a new low. If that happens, the same time frame would be the middle or end of next year. You know, I'm gonna give you an estimate sometime between July and October to get this bottom. This one was in September. So obviously, like I showed you guys, these times, pull up these charts, guys. This top, this top, this top, this top, they all line up time frame wise and everything. Okay, so look at what might happen here. That same weekly trend line. Once that breaks, that would be around here, March or February. Get a big rally, and it do the same thing as this over here. Once this happens, I think we'll know that's the true bottom. Now, how long will it just shoot straight to the moon and make new all-time highs in 2024 or 25 like people are talking about? Probably not. Another thing is the monthly. We're about to close the monthly. If we close below this trend line on the RSI, I had told you that's pretty damn bad news. But here is that same chart on the weekly. Like I said, I think we're somewhere in this range right here. This came down, made that false bottom. Like I said, that was in, which I believe if it plays out like this is going to be sometime in middle or towards the end of next year. This took 2 years to make this macro bottom. I know everybody's like, Bitcoin's different, blah, blah, blah. All charts, all markets react the same, guys. Are based on human emotion. But if you look here, let me thicken that up so you can see it. Actually, I'll make it white. Here's how a macro bottom forms. It doesn't do this. It doesn't bottom here and then shoot straight to the moon. This is a macro chart with a bubble pop. It took a long time. Now, this took 10 years. 10 years to make an all-time high. We draw a line across here. You can see what I've drawn in here. The inverse head and shoulders. That is a macro bottom formation, right? We broke it. We came back down, retested it, and blew up from there. So once this happens, towards, like I said, middle or end of next year, we'll start getting this. And then everybody will be saying, see, the 4-year cycles are right. We were off by a couple months, only to take way longer. Everyone's going to expect a new all-time high here. I highly doubt that's going to happen. I think it's going to take probably 8 to 10, 7 to 10 years before we break the all-time high, if we do break it. Remember, guys, I've showed you other bubble pops that have been 15 and 20 years and still haven't broke their all-time high. Just be careful. Don't get glued to one opinion or the other. But the good thing is, if this plays out like this did over here, we could see a major, 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 major bull run. But again, this is years and years away. I don't think it's going to shoot up like everybody thinks, this 4-year cycle thing. I do think the 4-year cycle is going to be invalidated this time around. So be careful out there. Thanks a lot for watching. Don't forget, smash that thumbs up. Leave your comments below. Let me know how you think the video should be laid out. And subscribe to the channel if you haven't already. Make sure your notification bells are ticked. Have a wonderful weekend, and I'm out of here. Take it easy, guys. See you in the next video.